The content provided on this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the full disclaimer. Now we're going to go ahead and hop on over to TLT here. All right, take a look at our trading view charts and break down what's been going on in the bond market. Now, if you've been watching the channel, you guys know that we've been waiting for this gap down here to fill at the 95 level. And you can see we actually went below that right to our key support level here of 94.73, closing just above there today. Now, to truly understand what's going on in the bond market, you need to understand and pay attention to the treasury yield. So before we do a deep dive into TLT and other things like HYG, JNK, look at the junk bonds as well, we're going to go ahead and take a look at the TNX. This is our 10-year treasury yield. Now, if we take a look here, TNX is breaking out, okay? So we just had a very strong breakout. We have our trend line here. We rejected, pulled back, and formed a nice J-hook pattern here. And it looks like to me, this thing could continue upwards to 4.227 or even 4.33. At this point, we would be expecting some type of a correction in the TNX and a move down. If we zoom in, I did have a bullish structure on TNX, but I actually thought that this was going to be the top of wave 5, and I thought we were getting an A, B, C down. It's what it looked like, right? I mean, if we come here and we throw on our fib retracement tools, okay, and you take a look, we initially rejected the 786 retracement level, and I thought this was our A down, B up, and we were going to get a C down. But we actually, it was a fake out, and this is much more of a wave 3 right here. This whole entire move. So, TNX can still head a little bit higher, all right? And this is going to result in your bond funds dropping, okay? Now, you can look at the specific one related. You can look at the 20-year treasury yield if you want to look at TLT, but I like to just look at the TNX and get an overall understanding of, for my overall understanding of the bond market. So it does seem like this has some more room to the upside. Does that mean it's going to continue going up in a straight line? No. Okay, we could come back and retest this trend line and then push higher. But I do think it's very possible that we see the TNX at 4.227 or even 4.330 in a relatively short manner, right? Within a couple weeks, if not sooner. So definitely pay attention to that, right? And once we hit here, all right, once we hit these levels, we would be expecting some type of a correction in TNX, and that would result in your bond funds going up. So now that we have an understanding of TNX, all right, let's go and head on over here to TLT, and you can see that the exact opposite. This thing has been dropping like a rock as TNX has been really rallying very, very strongly. Now, what I like about TLT at the moment, okay, is we have 3 gaps up to fill, right? We've got one here, we've got one here, and we've got one here. So TLT has literally gapped down 3 consecutive days in a row, and it's not the first time that it's done this, okay? When this thing starts to sell off, it starts to sell off very aggressively and very rapidly. Take a look back here in December of last year, it gapped down 1 day, 2 day, 3 day, 4 days in a row. Then it consolidated, and then it gapped down 3 more days in a row as well and formed a little bit of an island bottom reversal right here. So that's very well a possibility of what we could see in TLT now, right? When you see it selling off really hard, gapping down here, gapping down here, gapping down here, you tend to see this pain really, really quickly and really aggressively. Now, there's a lot of reasons that it's dropping, okay? You have the whole deal with the Bank of Japan. And so the Bank of Japan essentially is going to be buying up their treasuries, and that's going to put less money, into our treasuries, basically. Then you have Janet Yellen, flooding the treasury market. And, you also have just inflation data. You have the jobs reports. We just had the Fitch downgrade on the U.S. credit that really dropped a lot of things in the market. And so there's been a lot of catalysts really dropping, the bond market and sending these treasury rates up higher. So for right now, 94.73 is still that important level. If we break below there, all right, and we flip this level from resistance to from support to resistance, 92.30 is going to be the next target area. Now, I'm not saying we have to get that low. We are very oversold here on the RSI, and we had a clear sell signal here on our MACD. And 92.30 is very close to the bottom on TLT that we put in over here back in October. And we really, it's been a long time coming, right? This gap is from November of last year, and I've been waiting patiently to start accumulating a position in TLT until we came down and filled this gap. And now that we are here, I do have a long position. And it's not a short-term long position. It's for the long term. And I'm comfortable adding here. If it continues to go lower, that's fine. I can manage my risk. So I'm not telling or advising any of you guys to buy, but just kind of explaining some of my thought process behind this. Now, there's a lot of lines on the chart. And you may be wondering what these are. These aren't moving averages. These are actually the anchored VWAP. So we have our monthly anchored VWAP here. We've got our weekly anchored VWAP. We've got our quarterly, and we've got our yearly anchored VWAPs. And you can see they're all pointing down in a downward direction. So, hands go to the bears right now. If we were to get a retest, okay, and maybe, just a simple retest, 96.65, that key resistance level I gave you guys, that's lining up with our weekly and month to date anchored VWAPs right here. So if this starts to push up, you're going to see these come down to this area, and that is where institutions like to buy and sell. All right, big money. The bond market is bigger than the stock market, and large money institutions and hedge funds, people like Ken Griffin at Citadel, they're known for buying and selling at these volume weighted average prices. You can see here we get close to that year to date anchored VWAP. All right, and then we get a strong sell off afterwards. So that's basically what I'm looking at for TLT. Really need to hold 94.73, but it's all noise, unless we get above 96.65, right? If we chop and consolidate here to absorb some of the move, that's going to bring the RSI out of these oversold conditions and potentially give it more room to drop down to 92.30. So you need to be cautious of that. Now, remember, we are expecting TNX to top out, short term sometime soon. All right, based on that TNX chart that we saw, and that would result in things like TLT going up. Now, whether or not TNX is going to put in a true top and get a reversal, or whether it's going to be a healthy pullback, is going to be something that we'll have to pay attention to. But if we start to see a TNX pull back, then that gives it some room, and for things like TLT to go up a little bit. One thing I do want to mention before we change charts is if we come here and we throw on our Bollinger Bands. Okay, we are trading outside of the Bollinger Bands. We're completely outside of the Bollinger Bands. That's an anomaly, and oftentimes price action will snap back into the Bollinger Bands. Okay, so be on the lookout for that. I wouldn't really be surprised if we see that sometime soon. Just a little bit of mean reversion, basically, being that we're trading outside of these Bollinger Bands. Let's go ahead and take a look at HYG right now, and we'll break this down. Oftentimes people refer to this fund as smart money, and they refer to SPX as dumb money. We'll go ahead and take a look here and just kind of show you guys something real quick. And we'll remove these drawings real quick. All right, and you can see that these two trade very, very similarly. And there's been a huge divergence really since we'll go back to the date, but you can see here where the stock market continues to put these higher highs in, and the bond market is actually continuing to put in these lower highs. So there's been a huge divergence here between HYG and SPX. These are two things that I like to look at together, just to kind of get a sense of what's going on behind the market. We'll go ahead and put our drawings back on here real quick and take a look. All right, and come in, and we'll throw on the Bollinger Bands here as well. You can see that this one, we're actually in our Bollinger Bands. So for HYG, it hasn't reacted the same as TLT and some of the other funds that we're going to look at, or ETFs. You can see we're actually holding the 50% retracement level here of 74.13. Now, we did get a failed breakout. I honestly thought that we were going to see a breakout, and we were looking to potentially be targeting 76.45 to the upside. But, we hit resistance 1, 2, 3, 4, 5, 6, 7 times. We basically tested this trend line here. We're not able to break through. We even put in a bull flag, and we're not able to break out of the bull flag. And we actually got a break down here. So, you can see here, we also have some gaps to fill, right? We have a gap here. We have another gap here. So definitely pay attention to those. Those are going to be some trading opportunities. Remember, about 90% of the time gaps fill in the market. The question is when, not so much if they're going to fill. Definitely some more gaps up to fill on a lot of these charts. But right now for HYG, 74.13 is that big support level. If we break below there, all right, we have one last support level here of 73.77. Okay, and that can be an area where we get a look below and fail, which is pretty significant. I'll describe that in a second. But if we break below 74.13, pay attention to 73.37. If we end up breaking there, we're going to be attracted to this demand zone down here, which is a larger demand zone from about 73.14 all the way down to about 72.58. That's going to be our key demand zone here for HYG. And that's really where price action is going to be drawn towards if we break this trend line. You zoom out here and you can see that we have this massive pattern that's been forming for a while. We'll go ahead and take this off so it's a little bit clearer. This thing has been consolidating and squeezing for a very long time, and we should see a break to the upside or break to the downside here pretty soon. If we break to the downside, I just gave you guys that key demand zone, but it's very possible that we come here, test this, and then come and retest some of our previous lows around 71 on HYG. Things are going to be a lot clearer over the coming weeks. The reason that a look below and fail is so significant is because when we come down and break this trend line, a textbook example is a breakdown, retest, and push lower, right? So at this point on the retest, when the breakdown and the retest, this is the chance and this is the opportunity for bears to show that they're in control of price action and push price lower, right? But if you look below and fail and we come back up into the range, it's actually a bullish signal, and it's going to signify that we're going to come up towards the top of the range. And the reason being is because bears did not take advantage when they had the opportunity. That's a signal showing you that bears are not in control of the price action, that this was a liquidity grab, in that bulls are actually in control of the price action and most likely going to drive it back towards the top end of the range. We'll go ahead and take a look at the TIPS ETF right here. This is one that you can look at with QQQ. I like to look at the TIPS and the Qs together. Very similarly, how I like to look at HYG and SPX together. And you can see that there's a divergence in this one here as well, right? If we were to remove some of these drawings, you can see that, they were trading very similarly, but once we hit our bottom in October, the NASDAQ has really just gone up massively since that time. And meanwhile, the TIPS is basically gone nowhere. It's gone completely sideways. This is, something that used to work together, but, we're living in a very strange times right now with the market and seeing a lot of things that used to work not really work anymore. Now, let's go ahead and dive down into the chart. Okay, and you can see that we did actually get our five-wave structure here to the downside when it comes to the TIPS ETF. And we actually just broke this key trend line right here. So very possible that we could get a little bit of a retest and push lower. That would put the TIPS ETF down here to about 104.58 up to about 105.10. That's going to be our key demand zone right here that we're looking at. We did have an inverse bump and run pattern, which I really like trading this pattern a lot. And I talked about it in my last video and highlighted this. This was a really good trading opportunity, but essentially you have your prevailing downtrend right here, and then you get this dramatic bump down in the price. And when you break this trend line, it's often a very good trading opportunity. And you can see it quickly rose up to the top here, broke the second trend line. In a perfect world, you're going to get the break between both trend lines. But oftentimes this move right here is enough for me to make enough profits. When you look at the anchored VWAPs here, you can see that, again, all of these are starting to point down. If we were to come up and get a retest, we would look at 106. Maybe 106.50. That's where our week to date and month to date anchored VWAPs are. If we were to throw in our Bollinger Band here, you can see this one also trading outside of the Bollinger Band. A really good example of that mean reversion you can see here when we're trading outside of the Bollinger Band, and then price action snaps back in towards the Bollinger Band. So that's definitely something that could happen. If we were to continue rallying, I mentioned 106, 106.50. All right, our quarterly anchored VWAP in our middle Bollinger Band, that's going to be right around 107. So, nice even numbers here, 106, 106.50, and 107. Those are going to be some of the key areas that you guys want to pay attention to for sure. If you're looking at the TIPS ETF, we'll take a look at junk bonds real quick and go to J and K, break down this one for you guys. gaps all over, right? We talked about the look below and fail. This is a really good example of a look above and fail right here at the moment, and this is a bearish signal. So we got the breakout. We were supposed to retest and push up higher. You can see we had this massive outside candle, and this was the opportunity, right? If we look here, this was the chance for bulls to show that they're in control, right? They had all the opportunity. We just kept dancing around that trend line here, and the bulls did not take advantage of the opportunity and push price higher. So that actually showed you guys that bears were in control, that bulls did not have control of the price action. And you can see we're pushing down towards the lower end of this range. Support here is going to be 90.57. Now, if we come here to that support level and break through there, right, our next level is going to be 89.56. But when we zoom out and we take a look at our trend line that we have here, we've tested it multiple times already. And if we break through there and break 89.56, 88.39, 87.16, and 85.59, those are going to be some of the key levels that you want to pay attention to on the JNK, on JNK. All right. Now, you do have some resistance up here, all right, basically at 92.77. You can see that that was a strong area of resistance, and it just wasn't able to climb above there. If we hold support at 90.57, and we come up to 91.57, breakout above there, you definitely want to pay attention to, that 92.77 area. That's going to be a very strong resistance level. We'll take a look at LQD next. All right, this is going to be your investment grade corporate bond ETF. And you can see this one looks very similar to TLT. Huge, massive gap down, guys, on LQD down to 103.02 and 101.38. Similar to a lot of these charts, we had a triangle pattern forming here. Another really good example of these, look belows and fails, look above and fails. You can see here where, we came down, we broke below our trend line, and bears had the opportunity right here to go and push price lower. And did they do that? Did they take advantage of that opportunity? No, they did not. And as I mentioned, oftentimes you go towards the upper end of that range that you were trading in. We came right up here towards that upper range of our trend line here, and after that we got the real reversal, right? And we got the real move down, came down to a big support level here of 104.83. We're trying to hold that as support right now. You can see his prior resistance many times over here, then it flipped to support, then it flipped to support again, and now we're breaking through there, trying to break through there at least. What's really interesting is that price action does not like this level right here, okay? 105.15 to about 105. Price just keeps gapping around that place, right? We gapped up over it. Okay, we gapped down below it here, and we still haven't even filled that. It's got 3 massive gaps up to fill on LQD. So definitely pay attention to those. Those are going to be some good trading opportunities. But if we break this 104.83, realistically, I think there's a very strong chance that we could come down and fill this huge, massive gap we have to the downside. That's it for today's video. Hopefully you guys enjoyed it. If you did, smash that like button, subscribe to the channel. I also have a free email newsletter that I just started. You guys can join that using the link in the description below. I'll be putting out really good content, okay? It's not going to be spammy. It's not going to be anything like that. I'm also going to be including some free trade ideas in there as well. So, I think it's going to be a great newsletter. I'm excited for it, and I'd really appreciate it if you guys would join that and subscribe to that as well.